Good morning. Welcome to Wise Tech for Wise Money. Today's subject is the compliance doctor, FCA ready without the pain. I'm Gary Wayne, founder of A1 Solutions International. At A1, we help businesses, wealth managers, RIAs, family offices scale through precision growth systems. Combining A1 power client acquisition with streamlined operations to grow profitability. Today we're talking about staying FCA ready, without the pain, authorizations that land, AML that actually works, and what to do if a VREQ hits. Our guest is Lee Werrell, FCSI, the Compliance Doctor, CEO of the Compliance Doctor Limited. Lee, it's great to have you here.
Thanks, Gary. Delighted to join you.
For listeners new to you, maybe you could give us a quick origin of how the Compliance Doctor began and how you got into compliance consultancy.
Yes, that's a very long and deep question. I will try and keep the answer fairly short.
We've got plenty of time.
Well, basically, I started my career in 1988 in financial services after leaving the Navy. And in 2000, I switched over to the dark side, compliance, and I identified that there was a lot of underserving of the small and medium-sized firms, because all the big firms seem to do huge projects costing an immense fortune, which obviously the smaller firms couldn't afford. So my career in financial services has spanned over 35 years. This is our 25th anniversary for compliance consultancy, and it's going from strength to strength. I started the original consultancy, and then about 12 years ago started the Compliance Doctor brand to promote basically the way of dealing with customers, clients, by effectively diagnosing, prescribing, and then providing a solution to follow up with. And it's taken off, as I say, with people identifying with that and seeing that we're not the big four or big five. We are actually quite a small niche organisation. There's only 7 of us. The Compliance Doctor name came from, as I said, the idea of diagnosing something. But we do everything involved in regulatory compliance, and we even work with a few non-regulated firms as well, specifically on governance issues. But effectively, we know that compliance is about good organisational health, and it's trust and not all the red tape that people think of. If you get it right in the beginning, it's plain sailing. How does that help?
Yeah, very good. What are the top 3 ways that firms get into FCA trouble? I mean, there's a lot of VREQs issues nowadays. A lot of smaller firms that are under pressure. How do they actually, get into this situation, in your experience?
Well, unfortunately, there's a lot of pitfalls with the FCA. At the end of the day, good compliance is not what you do necessarily. It's what you write down that you did and why. And probably the main problems we come across is people's underestimation of the FCA's focus on things like culture and governance. I mean, with consumer duty, that is top of the pops at the moment, and will probably stay that way for a number of years. Many firms think it's all paperwork, but the regulator looks for evidence. They don't just want to see policies, procedures, reports. They want to see how it actually works in the firm. The second way is probably where firms are starting up and they try and rush the application process. The FCA take 6 to 12 months, depending on what the firm is and what they're doing. And the application pack is key. The regulatory business plan is vital to that, because it's effectively a showcase to the FCA to say, we're so wonderful, that's why you need to authorise us. But firms try and shortcut all this, and their form filling may not be correct, but also their supporting documentation is either templates that they haven't personalised properly, or everything doesn't tie in together. And the main third issue that we come across is obviously poor record keeping, because, as I said, compliance is not what you did, but what you write down that you did and why. But in running a business, you need to have good management information, and unfortunately, most of them don't. And I can understand, because I'm also a fellow of the Institute of Sales Professionals. I have a corporate view as well as a regulatory view on businesses, and businesses are there to earn money doing what they do. Compliance for them is an extra burden, but it can actually be made easier and more straightforward. You mentioned VREQs, and we've seen a number of VREQs issued quite quickly these days. What's happening with the regulator is it's easier for them to ask a firm to enter into a VREQ and then deal with the issues. Before, there used to be an extended either supervision and then enforcement, but now they seem to go more for the VREQs straight away. The VREQ can be avoided, and it needs to be negotiated properly, and that's what we can help firms with and do. If you let the FCA dictate the terms, then it will be for their benefit. If it's going to happen, you might as well try and get as much out of it as possible.
How's I hear that a lot of middle tier bank companies, brokers, AIFMs, small funds are all getting hit with VREQs. There's been a record amount in the last year or two. Why is that all of a sudden?
Well, a lot of it is because the FCA is becoming a bit smarter. They're more intelligence driven. They look at the reports, the reg data reports. They obviously have algorithms which pick up any anomalies or errors or inconsistencies, and that just raises questions like all good MI does. They then investigate, and it seems that a lot of firms have been sailing close to the wind on a lot of things, and Consumer Duty seems to have pulled that out, and therefore the regulators more interested because Consumer Duty is their baby. So you have to look at a lot of these issues that firms have, and if I can maybe give you a brief example, we had a discretionary fund manager, for example, that was, by all research, likely to get a sizable fine, around about 65,000 would be typical in that area. But the main problem was that they hadn't kept their compliance up to date. They hadn't updated their financial crime policy since they got authorised a few years before. They hadn't updated a number of their policies to mirror the other governance that they had in place. So we conducted a regulatory sweep on all of their documents, all of their governance, and worked on a top-down basis. And we then helped them not only sort out the governance library so that everybody had access to it, and we then made sure everybody was using it properly, because the worst thing with policies and procedures is people may know they're there, They may even read them, but they never apply them to their job, and they're never checked up on as to whether they apply them to the job. And if you get an employee who uses shortcuts, heuristics, as the regulator likes to call them, that's fine. Change your policy if it works better for the firm. But if it doesn't, then the employee may need to be retrained. But effectively, as I say, what we did was we rewrote their key documentation. We put on a regulatory horizon scanning system. All their policies were aligned, and we set up a quarterly governance review schedule for that. At the end of the day, the FCA acknowledged the improvements, and that followed a supervisory visit. But the policies were all updated within 3 weeks. Staff gained confidence in the regulatory shifts that had occurred, and everybody pulled together, and they escaped any further scrutiny. So that's the sort of thing we can do, and because we're a small, some people say niche or boutique firm, we just say small, but because of that, we can actually react quite quickly, put a team together, and get in there and get things sorted. And often the regulator will be quite happy if a firm employs a compliance consultancy to assist them in rectifying any issues. So that's the sort of thing we do, and that's the sort of thing we come across all the time. And as you say, VREQs are really prominent now. One of the most popular pages on our website is how to handle a VREQ, and we monitor that quite a lot.
When a VREQ gets issued, a lot of the time, from my experience, it can actually destroy the business. How do you get around that? Because the VREQ can remain for like 12 months for someone to get out of it.
Yeah, absolutely. And that's why the VREQ needs to be managed. The FCA use two basic supervision tools, the VREQ and, of course, the dreaded Section 166, the Skilled Persons Report. But the VREQ itself, if it's negotiated properly, which it can be up front, and you give certain guarantees to the regulator that things will be done, what we find is firms come to us after 3 or 4 months of a VREQ saying, we'll be no further forward, we're not getting any traction here, the regulator's breathing down our neck. Quite honestly, we're on a hiding to nothing by that time, because it's got really serious. And the regulator, it's a bit like the old army inspections of married quarters. They start lifting the corner of the carpet, find a bit of dust, and then they rip the carpet back to expose everything that's been brushed under it. We try not to get to that stage. So when we take over, we project manage the whole thing. We plan it out. We provide milestones for the firms, and we build all the remediation in that the FCA expect, reporting back to them on a regular basis. And again, firms that are managing it themselves think they know better, and they don't report to the regulator, they don't provide full updates. And because they're so close to the actual work, they assume the regulator understands how they do work, which of course they don't. So these things can be mitigated quite quickly, and VREQs can be got rid of in a few months if it's managed properly. I've known VREQs last 18 months, 2 years, because firms will not engage properly with either legal counsel or compliance consultants who know what the score is and work with the FCA on a day-to-day basis.
You have a fixed price approach. How does that work? How do you manage that and the amount of work done, etc.? This was again something that surprised me when I first started in the industry.
consultancies worked on what they call a per diem approach, and that's effectively an open checkbook. And when you're dealing with small and medium-sized firms, and we deal with a lot of startups for the authorizations as well, they need to have some kind of budgetary expectation. So I came up with the idea of providing specific scope projects and pricing them accordingly and giving them a fixed price. We've all heard of the nightmares of solicitors charging by the 2.5 minutes on a phone call and things like that. We include everything in our fixed price, which makes us, in a lot of cases, unique. So if somebody sends us an email, we don't charge them an extra 50 quid. If somebody phones up, we don't start a clock somewhere. They have the confidence that if they don't know, and they can ask, because we have a policy of no stupid questions. If you don't know, you need to ask the people who do know, and that is generally us. And if we don't know, we'll certainly know somebody who does. So that's basically how the fixed price works. And because when you're talking of small businesses like IFAs and family offices and even discretionary fund managers, they don't have vast compliance budgets that they can spend on the big five. So they need to know exactly what sort of liability they've got, and then they can program it into their finances.
Across your client types, solicitors, accountants, IFAs, funds, family offices, what's the first choke point you normally see when there's an issue, and how to unblock it?
Yes, the choke points. For a lot of firms, because they are entrepreneurial in their origins, they tend not to have their job roles clarified sufficiently. There's no clarity around who does what. And we find this particularly in advisor firms where somebody has been, if you like, lumbered with the compliance role, and they're expected to produce certain figures themselves. And then another director might say, oh, well, I'll help you out with that bit. And these roles get merged and blurred. And the regulator doesn't like that at all, especially under SMCR and even more so under Consumer Duty. They want to see people with specific responsibilities. So that's one of the main problems that we come across. And it's really kind of difficult to understand when you're actually treading the boards as to how the script is going to play out, which is why we have the benefit of being able to take a step back and look at the bigger picture and say, right, okay, that's your job, that's what you need to do, these are the results, that's the controls and the management information you're producing. Is that what the board needs? And then we follow each of the areas through and make sure that the board can function using all the information provided.
Okay, if I'm a principal and I notice, what would I notice first that my compliance is not really working properly?
Everybody phones in sick. No, I mean, it's, again, because people are so close to their businesses, they don't necessarily understand what's going on until it's too late. But certainly I would, as an owner or an executive director in any firm, I would consider that complaints is probably a good warning sign. And again, if your MI is set up properly, you'll be able to identify any increasing trends of complaints in a particular sector or just generally overall. People never complain if they don't care. And many people do care about the firm they're dealing with and investing money with, so they will complain. And the complaints aren't always necessarily articulated in the best way, but it's still a complaint. It's an expression of dissatisfaction and it warrants investigation. It could be something simple, such as my direct debit keeps failing. That's easily fixed. But if there are underlying reasons why somebody either complains once or multiple times, then there needs to be, a thorough investigation. And complaints is one of the main things that boards should consider every time they meet. That's key. Now, the complaints themselves obviously form part of the MI, as I said, but again, a lot of businesses have MI that is either out of date, and it may well have been suitable 5-10 years ago even, but today it's grown because various people have said, oh, we've got to include that and that's got to go in there, but nobody actually asks the board what they need to see. And so they end up with this huge pack, 30-40 pages, which has meaningful nothing in it. It's really, the gems are buried so deep that it's a huge problem, and that would certainly, if anybody's in that situation where they've got a board pack which A, they don't understand, or B, is not giving them what they need, then I would suggest a review very quickly. And it's something they can do internally, but to be objective, of course, an independent review is a lot better.
Well, what's the 5 essential things they should have in this pack?
Well, if I had a business, or I was asked to help a business sort themselves out and make sure that they were running properly, I would insert 5 major things into every board pack. One is a live breaches and incidents log. Too often, the breaches and incidents happen, but don't get reported for up to a month or even a quarter later if the board have quarterly meetings. Things aren't necessarily escalated to the MD or CEO straight away. Again, when we sit in with firms that are having an FCA visit, or afterwards, we find that people say, "Oh well, I put it in the MI pack." Yeah, but that was like 2 months ago. So that's a key element they need to keep tabs on. Financial resilience. Obviously, you need to look at the capital and liquidity and safeguarding if it's a firm that requires safeguarding. Anybody that does CAS, obviously, you've got all the reconciliations. A training and competence dashboard. You need to know who in your organisation is trained and is competent and is progressing with their training. Training is so important, and too many people come up with the answer, well, if you train them, what happens if they leave? Well, I would say it's even worse if you don't train them and they stay. You could end up with a business that's being trashed internally. And that's the problem. If you get people in a training mindset, you'll be surprised how they will progress themselves as well as using the firm to help them, and they will help you with your succession planning, because they will develop into good managers, and good managers obviously make good future heads of department. So that's 3 of the things. Customer outcomes and complaints trends, as I've mentioned, but also customer outcomes. If you serve with Consumer Duty, if you survey your customers on a regular basis, you're going to build up a trends database over a period of time, and you'll be able to spot things that are going well and things that are going not so well in your business, and then you can look at improving them. So that's very key, and Consumer Duty has probably highlighted that, which needed to be done that TCF didn't really cover. But the ultimate thing in a board pack that I would require is a breaches register. But not only that, also include horizon scanning and regulatory developments, because we're living in a huge change environment. The whole world is moving forward at a rapid pace. I mean, if you look at the development of AI in the last 2 years, 3 years, it's just snowballed. And RegTech is catching on the back of this, and there's so many things available. But good compliance is not having super tech. However, we've got to live in that world. So the regulatory environment has to change to accommodate all this. AI ethics is a big question, big problem at the moment. People want to know what the best ethics areas are, what they need to look for, and that's something we're working with a couple of firms on, because it's not just what people do, it's why they do it, and also the consequences of them doing it there. So all that sort of thing we need to look at from a board perspective to keep our businesses running. That's probably covering the main weaknesses that you're going to find in any business.
Sure. When it comes to AML control, if we could put one thing in place this week to ensure that we were bulletproof, what would it be?
Well, the sanctions and PEP screening, for a lot of firms, they tend to do it, how should I say, as a habit, but they don't necessarily look at it. They just go through the motions, if you like, tick the boxes. What you really need to have is a risk-based escalation flow for most of these, because some employees might say, yes, I identified that guy, he is a PEP, he's related to a politician from that country or our own country or whatever, and I recorded it. Yeah, but the MRO needs to know about it. So you should have fully documented and updated procedures for escalation of any of these issues. It doesn't necessarily mean the person is going to be sanctioned in any way, but it's up to the MLRO to review it, investigate the background, and get board approval, perhaps, for continuing business with that person. But unfortunately, sanctions and PEPs is a weak area, and if you look at the things that people are being fined on the FCA website for, AML sanctions checking and PEP identification is top.
Okay, if a VREQ lands on your desk today, what's the most important things to do in the first 48 hours, practically?
Well, whether it's a VREQ or even a Section 166,
What was a Section 166?
a skilled persons report.
Right, okay.
That's where the FCA invite you to bring in a specialist firm. We were appointed as skilled persons back in 2012, before they had the panel. But whatever happens, you issue an order, which is called a non-destruction order. Nothing in the company needs to be destroyed, shredded, deleted, because it may all help you in the future. That's one of the very first things. Secure and preserve all records. Get the board briefed on the facts. This again is another area where myths will often permeate. The board need to know the facts, the real facts, not the assumed facts. They need to know what the process is going to be and how best to tackle it. That's probably the second option, because speculation is a killer, and people get very carried away with what they think may happen. Depending on the situation, you obviously need to map out the customers, the risks, things that have been identified, and what impacts it may have on other areas of the business, so that you can corral everything and make sure that everything is moved into the right area. And the other thing is to have a single point of contact with the FCA. That is most vital. So that person knows everything that's going on backwards and forwards, but also so that everybody can look to that person for answers without him saying, well, I don't know, because Fred dealt with that, which just makes a mockery of the whole system. So that's probably the first steps, 24, 48 hours.
Okay, if the FCA then opens an investigation or enforcement inquiry, does that sit in your remit? And if so,
Yes.
what do you do straight away? When do you bring in counsel? Is counsel really needed? Can a consultant like yourself deal with it? And who talks to the FCA?
Okay, just a couple of questions then. Yeah, obviously, the investigation and supporting the investigation is very much in our remit. We will bring counsel in if necessary, and sometimes it is very necessary, depending on what the situation is. But fortunately, we're often called in before counsel can spare the time, and we can structure things and lay a roadmap out for remediation of the issues before council gets involved. If council is to be involved, then they can look over it, and more often than not, they look to us for guidance on that. And as long as we can explain it to them satisfactorily, they're usually happy. I've never come across, in all my years, I've never come across a council who is aggressively against what we do. And I've worked for some large companies in this area. So we also have to try and quantify where there's going to be some kind of redress or potential liability of the firm, again, depending on what the situation is. So we then also have to provide a briefing for the board as to what to expect, as well as the potential quantum of the impact over time. But normally we would cover it in a sort of quick 4-week project, because the FCA do give you time to sort this out. They don't just suddenly appear on the horizon one day and expect you to have everything done by sunset. There is often a good period of time, up to a month, and we will take a board plan. First of all, maybe doing an analysis of what has been found, so then we can work that out. That can obviously take 2 days, or it could take 5 days. Could possibly take a bit more if it's a bigger issue, a bigger firm. What else would we do? Immediate risk mitigation and custom communications. And this is what a lot of firms forget, is that they need to communicate to their customers, reassure them that everything's fine, or clients, investment clients or whatever. This is key to continued longevity of the business. Make sure you get it right. So a communications plan is also formulated and approved. We draft the remediation roadmap, as I previously mentioned, but we also create our own MI dashboard of how things are going, project dashboard effectively. But from that, we can identify any weakness areas that may need further action. And engagement with the board is obviously critical, but it depends if the board want to deal with the FCA direct or whether they want us to deal with them on their behalf. Then obviously we have to get agreements drawn up and what have you. But the FCA usually want to deal with a board member, preferably the MD or the CEO, because, you know, effectively they're running the show and they need to talk to the main people. But when it comes down to smaller firms, sometimes we will step into the breach and negotiate with the FCA on various things. The main problem with VREQs is people concentrate on working through the actual VREQ itself. What is key is once the VREQ is finished and the FCA is satisfied, they won't actually mark it off as completed until you can prove that the remediation has been embedded in the firm. And that can be 3-6 months later, where they need to see some kind of evidence, which is often when we go back and we'll do a quick and dirty compliance audit to prove that, and then hopefully the FCA will approve our report and sign it off.
What about on enforcement? When they get an enforcement notice?
Well, it's pretty much the same, except the enforcement people will want to see specific things being done and evidence of those specific things. It's kind of, a VREQ in a way draws a line in the sand. Enforcement, unfortunately, is an ongoing problem because they are pedantic about certain things. And the enforcement division do have a very difficult job. And I do sympathise with them because they are always working with different firms with different setups and different processes and procedures, and they have to understand all those and how they impact the outcomes they're looking for. So there's a lot of complexity for them to understand. Firms often don't make it easy because they consider it as somebody sat on their shoulder watching whatever they do and everything they do. But again, we can help mitigate that by providing support, providing a clear roadmap with definitions, with milestones, with MI to be fed back.
Do you use a lot of technology or automation within these processes?
Yeah, good question. We have rejected or resisted, I should say, a number of reg tech solutions over the years because we always felt that technology was moving on quite quickly, and to hang your hat on any one typical program would be potentially disastrous because you're locking or getting your clients to lock into possibly 2 or 3 year contracts, and there may be something better around the corner. But also, people. Compliance is a people business, not necessarily a tech business. And there are obviously tech things which we use. We obviously have templated procedures for reviewing certain areas, whether it's a regulatory business plan or AML procedures. They're more toolkits than anything else. But obviously, when it comes to looking at certain things and checking up, we use AI. We always use it in temporary mode, so nothing's stored. But we do have an ethics policy on that. But tech is not having large amounts of tech is not the answer for any business. It helps. Certainly in certain areas, as long as you know what the limitations are and how to compensate for any shortfall areas, we often get people come to us with their wonderful red tech solutions, and they demonstrate it to us, and we go, yes, but what about this and what about, oh well, that's coming in the future. Well, I'm sorry, but we need it now. So it's not it's really not the solution, but we find that with all our senior consultants that are qualified to QCF level 6 plus, and they've all got senior management experience either as on a board or executive committee, they can use the templates that we have and adapt them to the situation they find themselves in, and come up with suitable outcomes for the client. I'm just trying to think. We had a mid-sized payments firm that faced a VREQ over safeguarding a while ago. We stabilised their governance, remapped the safeguarding processes, and produced an evidence pack for the regulator. The FCA lifted the restriction within 6 weeks, which was like light speed. I mean, it was, very, very fast. But the key to that is being able to evidence the fixes. It's not, it's not saying, oh, well, we use this system and that system and this is a printout. We can actually demonstrate the whole thing on paper effectively, which was easily followed by the regulator from start to finish.
Very good. There's a lot of talk about the FCA. People are very worried about them, nervous about them. What's one myth you keep hearing about the FCA and their services and their compliance, and what's the reality?
Well, yeah. When I joined the industry, which was the 4th of July 1988, the first financial conduct, the Financial Services Act came into effect on the very first day I joined. And from then on, I always used to hear, well, compliance is a sunk cost. We'll never recover the cost of compliance. But that has morphed over the years to now where people view it as, compliance slows growth, or compliance a growth inhibitor. In reality, if you have a good compliance, whether it's a compliance manager director or whether you have external compliance support, it accelerates growth because it builds the foundations of governance, risk and compliance so that you can operate properly, effectively and efficiently, knowing what's going on in all parts of your business and being able to identify any issues that are not. If I had a magic wand, which I haven't, although some people think I have sometimes, but I'd make every board see compliance as a trust capital, not a lost investment, if that makes sense.
Yeah, it does. So, give me 3 takeaways, one for 30 days, one for 90 days, that basically you would give people advice to get their compliance, in good order, so they avoid all this aggravation.
Okay, well, something everybody can do today is to work out their breaches log, and you can include that as your complaints and everything. Make sure it's fully up to date, and that the board get a copy of everything that's there so they can discuss it and identify any issues that they may have or concerns they may have. That's an immediate thing which should be relatively easy done if the compliance department is keeping records properly. In the next 30 days, I would say review your MI so that it really tells the board and other management levels, depending on how big the firm is, if the customers are at risk in any way, to make sure that they are getting their expectations met, they're being treated fairly, and obviously with the consumer duty that they have sufficient understanding of what they bought. In 90 days, we're talking 3 months, which in business can be a very, very long time. But you need to get your AML and other governance aligned, updated, reviewed, because you don't want to wait for a letter from the FCA, which the FCA operate in such a way where they send out a Section 165 request, which is a request for documentation. This usually comes under their themed reviews. But if you get one of those and they ask for all the documentation in the next couple of weeks, which is normally the limit, you don't want to spend the next 2 weeks burning the midnight oil, bringing things up to date. Get it updated now and get it reviewed regularly. We've got various free guides which we can provide to people if they want to send us an email, which I'm sure you'll make all our contact details available. We also have a free governance review, free governance assessment review at the moment, which is worth £300. But we will ask firms to provide us with a list of the documents they have. Don't worry, we have a checklist. And then we'll tell them if there's anything they're missing in a report, so they've got it in writing as a PDF, so they can then update it themselves, or if they want further assistance, they can go externally. And that's really, sort of what we can do to help firms now and in the sort of near to medium future, if you like. How's that going?
Well, I thought that was an excellent podcast, full of great information. I just need to point out that this episode is for information only, and is not legal or regulatory advice. If listeners need your services and they want to get hold of the free compliance guides and information packs that you have, where can they find you, Lee, and where can they contact you?
Well, our website is complianceconsultant.org, and our email address, our general email address is info@complianceconsultant.org, and that is singular, not plural. Otherwise it'll end up in a firm in Texas, I believe. If they want to book in a discovery call to discuss any issues, confidentially of course, then we have a booking page which is bit.ly/CCD, which is all capitals, and then lowercase ISCOVR, which spells out obviously compliance consultant discover as the main link. Or they can always ring us on our free phone number, which is 0800 689 0190. That's 0800 689 0190.
And you give advice on that line?
We will help people as much as we want. The thing is, nothing in compliance is secret, and there's no hidden agendas or special access to anything. Everything we do is publicly available, mainly on the FCA website. It's just that people need us to help interpret what it means and how it affects their firm.
Sure, I understand. Well, Lee, I really appreciate you being on this podcast. I think it's been very enlightening. I've certainly learnt a lot today. I'd like to thank the listeners for attending. I'd like to thank you for attending. I hope you enjoyed being a guest.
It's been great, Gary. Thanks very much for the opportunity, and look forward to doing some more.
Brilliant. I'm Gary Wayne with A1 Solutions International. Thanks for listening. We'll see you on the next Wise Tech for Wise Money. You can find me on LinkedIn, or you can contact me via my website, www.a1solutionsinternational, ITL on the end, that is, .com. Thank you very much indeed.